Good morning everybody. Welcome to this webinar, this first special webinar dedicated to the Forecaster software, a webinar that was created to make sure that all the people who use the Forecaster software can really use it to its full potential. This is an idea that was born precisely from the feedback that I have received, especially on my social networks from users who were interested in the Forecaster. They wanted to sign up and subscribe to the Forecaster, only that they were afraid of not being able to use it to its full potential, which is why precisely I thought to make this fixed appointment every Tuesday at 11 o'clock which precisely perhaps also using real things and happenings that happen precisely in real time. Precisely, we're going to use the Forecaster to see exactly how to make the most of it. So I would say let's go right away. Hello Rosano, I would say let's go right away on the Terminal Forecaster, and today I would start by giving you an example of a complete analysis on a stock that, due to the fact that the latest results have recently come out, is in the spotlight, and specifically we are talking about Amazon. So clearly, needless to say, to look up the stock, just type in the name and choose the stock listed on the main exchange. In this case, precisely, it is listed on the NASDAQ in America. And by clicking on the stock, we end up on the overview page, which is the page that was added yesterday, to the default basic forecaster software where we have the main dividend information. If indeed there is a stock that pays dividends, this is obviously not the case with Amazon, which has never paid dividends in its history. We have all the information related precisely to the performance in the various time periods. So 1 month, 6 months, this year, 1 year, 3 years, 5 years, 10 years, 20 years, and clicking precisely on the relative button displays the period of time that interests us. Oh, I forgot to click on the arrow here. We also find the description of the financial product of the security in this case, with the main data relating to the company. Scrolling down the page, immediately below the performance, we always find the performance but divided by year. So in this case, we have the last 20 years of performance divided year by year for the security. Very interesting, because it allows us to see what is precisely the historical year by year of the security under consideration. So let's start immediately to see a little bit how to do a complete analysis on the stock. Recently, in the last few days, just in the last few days, have come out of the earnings data that have beaten the expectations that analysts had, which is why precisely the shares have had a nice rise just in the last 2 sessions. So the idea to propose today Amazon was born because one of the journalists who works to invest point viz and stock market finance precisely asked me to make an analysis with the forecaster to see if this rise could be sustainable, if this minimum specifically could have been an important minimum from which they would develop new rises. So I redo with you the analysis on Amazon, so you can see how it is extremely important to be based on objective data and actual, and not be guided by what are perhaps our expectations that we have on a particular stock. So first thing, we have a software that gives us objective data. Let's use it in an objective way. Here we don't try to bend the data to justify maybe one of our views that we have about a stock. So the beauty is just that using objective data to have an objective analysis, okay? So let's start with the fundamental analysis, because when we are dealing with a stock, we are fortunate enough to have financial statements, and consequently we have precisely the ability to calculate what is the fair value, the fundamental value of the stock, the correct value that should, according to the financial statement analysis, have that particular stock. And specifically, we see precisely that right now, okay? The fair value using the Benjamin Graham method, so discounted cash flow, and the economic value added method is 101.81, which, since right now Amazon stock is at 132 on the stock market, means that Amazon stock is overvalued by about 23%. First of all, because you cannot use the Peter Lynch method. You see it is off the Peter Lynch method simply because the Peter Lynch method is a method that uses the PE, the price earning, to calculate the fair value. And if we go and see in the last financial year, the PE is negative because precisely it had a performance, or rather not the negative PE, but having had a performance, therefore a profit, a negative net income. Clearly we have a result that would return a negative result. Very important is not only to see the overvaluation at this time. We know therefore that the stock is overvalued, therefore its fair value. We see also here we have the market price in blue, which is 132, and its fair value, which is 181. We see precisely that the market prices are higher than the fair value. Very important, not only to see if it is overvalued, but also to see the health of the company. And for that, we use the Z-score, which is a parameter precisely that was invented by this Harvard professor Altman precisely, which in a very intuitive way returns us a number that clearly is the result of a whole series of calculations. If you are interested in the formula, you can find it online very simply. That tells us whether a company is at risk of bankruptcy. No, to make it simple, when we have a value, as the description here says, above 2.99, we are in a safe zone. So for Amazon, despite being overvalued, we don't have right now any risk of bankruptcy because we are in the safe zone. In the safe zone, we have a high Z-score of 3 and 93 below. We have institutional stock trades, but in this case, we don't need them. So what should we do now that we know precisely that the stock is a little bit overvalued? Let's go and look at what is the seasonality of the stock, because it is exactly like indices for commodities also on stocks. There is a certain seasonality. So we see that at certain times of the year, a particular stock tends to move with a certain regularity, and specifically, guys, we see that starting precisely from September until the beginning of March, okay? On the Amazon stock over the last 5 years, we have had an average negative trend. Okay, so if we go to highlight this period, we see that precisely this tends to be these months starting from September until precisely the beginning of March. So the first 2 months of the year is not such a good season for Amazon, or at least historically it has not been such a good season, so much so that we see precisely how November has tended to be positive, because 80% of the months of November in the last 5 years have closed on the upside, but we see that in December, on the other hand, is a year that has tended in history to be negative. Okay, if we go to C, we realize that actually in the last 5 years, if we had made a short trade in this time frame, we would have had an average positive performance of 20% in 80% of the cases. Okay, so although precisely in the last few sessions some positive news has come out for Amazon, we see that going to analyze some objective data, we realize precisely that is not perhaps exactly this is the time to go and invest in Amazon, because we have the fundamental analysis that tells us that the stock is overvalued. We have the seasonality precisely that tells us that we are in a season that historically has been negative for the stock. Do you understand that maybe it might be time to at least wait to invest in Amazon? And specifically to, by the way, here you can go and add even many more years for convenience and speed. Now we keep precisely the period of the last 5 years, but if we want, we can go and add even 10 years, for example, and 15 years. Here down, always go to highlight this period and see precisely how clearly the statistics worsen in quotes a little bit, because compared to the last 5 years where 80% of the times had a negative trend in the last 10 and 15, we have only 40% of these probabilities. So it is precisely interesting to see how just towards the most recent period the performance in this time frame has deteriorated. Okay, however, at this point, with all this data in hand, especially with the fundamental analysis data telling us that we have an overvalued company right now, we can move to the chart. And on the chart, what do we see? Well, we see precisely that if we go and draw a line where the fair value is present, okay, indeed 100, 181, we can do it just in a very surgical precision. 100, 181, we see that precisely the prices are a little bit overvalued. Very interesting to note how this fair value, the level of 101, is a level that already in the past has served very much as resistance first and support later. You see that when prices touch this level, actually prices feel this level. This means precisely that indeed it is a very interesting and actually important level for the market. Okay, if we go again to look at the seasonality, we said that in the period precisely from September, but we can also do it from the current date. Okay, we can expect in the case of a short operation and an average return of plus 10%. Okay, we see it here. Let's go and see from current prices, a 10% would mean a return basically on this level, on the level of 110. So 110, which is very close, clearly to fair value. So in this case, all this analysis, what was the purpose of it? Was to understand that Amazon right now is perhaps not the best investment choice, despite the fact that positive data has come out with respect to earnings. Okay, precisely because it is not a stock that is undervalued right now, and it is not a stock that is facing a season, a period where historically it has proven to go up, okay? Marco asks if the seasonality signals a strong up or down, but the technical analysis indicates a totally opposite trend. What do? You leave it alone or move on to something else? But tend to, Marco, keep in mind that if seasonality gives us a very, very strong indication, it is really dangerous, in quotes, to put yourself against. Then obviously seasonality can be wrong. However, keep in mind that putting yourself against seasonality would be like going out, leaving for a vacation in the mountains, putting on a t-shirt and shorts, maybe, yes, in the middle of winter, you even get a week of good weather, but you tend to be putting the odds against you. Okay? So since we have a very large amount of tools and we really have a lot of markets to work in, it's really a shame to go maybe incarnate yourself with a company and index a raw material and want to necessarily make a trade when we have very, very much better situations. For example, if we go and look right now at the LVMH stock, okay, which is Hivitone that we all know. We see a situation, a different situation, because meanwhile we also have a stock that has always paid rising dividends, and we see it precisely from the dividend history. We also have our little widget that alerts us precisely that this is a stock on which dividends have always gone up. But most importantly, guys, from the fundamental point of view, we have a stock where if we use all the valuation methods, we have an undervaluation of 42%. Okay? And even if we go and eliminate the method that returns the highest result, which is precisely the discounted cash flow anyway, we find the stock undervalued by 16%. This is extremely interesting because we have a stock precisely LVMH, we put it this way. So we can see it better, LVMH. We have a stock that from all-time highs. Here it is right now. It is down 26%. Okay? Which from a fundamental point of view is undervalued, because even wanting to be conservative, we have a fair value of 789, which here it is pretty much close to the previous highs. Okay, perfect. So we are really below what is the fundamental value. But most importantly, guys, we are on an undervalued stock where we are looking at a period that seasonally is very favorable for this stock, because it even starts a period that even goes up to August. Next, where 100% of the last 5 years has had a positive return, has had a return of plus 29%. You understand that it's a very different feedback than what we have on Amazon. So why go and want to buy a stock like Amazon where it's overvalued? We have a seasonality which is not the best when we have a choice of hundreds of stocks. And right now, for example, LVMH is undervalued. And also, it's also very solid from a financial strength point of view because we have a very high Z-score. Okay, if we then clearly go and do some technical analysis, we find that here we have a stock that in a long-term bullish trend. Absolutely interesting. And if we go and look at the daily chart, we realize that we have a very interesting increase in volume, right? Here, that is right. Coinciding with the last part of the uptrend, which has always been an extremely positive signal for the market. Because let's see, I will never forget, and I will never get tired of saying this, that high volumes exhaust trends, and often and frequently when we find high volumes on lows, it is an indication of trend reversal. Okay, David says the LVMH chart also speaks very clear exactly. So you basically see that here we have virtually all the various analysis that we can do, fundamental analysis, seasonal analysis, and everything that tell us precisely that we are on a stock that can potentially have a reversal, among other things, if we go into the overbought, oversold. We see something equally interesting, which is that all this downturn, the lows of the last downturn, were marked with green lows. Those who follow me know that the overbought, oversold indicator is nothing more than the detrended price oscillator, that when it goes to the lower part of this network made of Bollinger Bands signals us precisely that the stock is marking a divergence and consequently a bullish indication. And here we see precisely that we have a very important divergence. The last three lows have been marked. Prices have been marked with rising lows on the indicator, which makes us understand that potentially here we are dealing with a stock that is reversing. Okay. Yes, Carlo, quiet. We will send you the recording. So this first installment of this webinar, dedicated precisely to the forecaster, is meant to be a reminder to say, guys, we really have a very powerful tool at our disposal. Let's not go and fixate on a single instrument. Let's not go and necessarily want to make a trade on a stock. In this case, which was Amazon, that doesn't return us all bullish elements, but let's go and focus on something that really turns out to be a bargain. Keep in mind that I said this in a recent course of mine. In order to make money with the stock markets, specifically with stocks, it is not essential to be the first to unearth. At the beginning, the Amazon, the Tesla, the Apple of turn. Keep in mind that, for example, the good Warren Buffett discovered and bought. Apple, think, only in 2016, when the company was already a colossus and he found it undervalued in the market. Okay, so the ideal thing to do is to have under control those that are companies that we are interested in. And Amazon and Apple, definitely one of them, but also Amazon is very interesting as a company right now. However, it is overvalued, so we leave it alone, okay? If we go and see, for example, why Warren Buffett still has Apple in his portfolio, and boy, we see it here. If we go and use the method that Warren Buffett uses to value companies, which is discounted cash flow, we find that according to this calculation method, Apple is undervalued by 29%. So that is why the stock is not selling it, because it is a false myth. The one that Warren Buffett never sells the stocks he buys, because if we go to Invest Biz in the Guru Monitor section, okay, we only have to go here to see that, for example, in the last quarter, Warren Buffett sold a lot of shares of Chevron. Okay, so evidently, in his opinion, they were at least a little bit overvalued. Okay, so among other things, you also have this section where you can see the portfolios and then go looking for interesting stocks of all these great people who are the history of the world investors. And then thanks to the forecaster precisely, you have the possibility to go and see precisely what is the over-under valuation with the fundamental analysis, the statistics, with the seasonality and everything, and clearly see also the dividend history and everything. Okay. Luigi, don't worry. I will send you the recording shortly of this webinar so you can watch it. Or Giorgio says, today I go from monthly to annual, although right now following the forecaster, blah, 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 blah. In short, guys, the annual is really a gift. I understand that it may seem maybe a big expense of the €100 a year. However, I assure you that with this tool, you really have all the possible data imaginable under your eye, and consequently do the annual subscription. You don't think about it anymore. You know, you spend those €200 a year, but you really have everything at your disposal. And guys, rest assured, because new features will continue to come out that really are a cannonball. Always remember that within the forecaster there is a calendar. So if you go to the fundamentals page of a stock, you can activate and put, by clicking on these, simply precisely the important dates for the various instruments, so that you can be alerted of what happens. And then precisely in the calendar, exactly as you see in mine, you will find all the interesting data. Okay? Oh, see, Andrea says the forecaster is a bomb. With one trade, I paid myself the annual grade. Well, I am very happy. Fabio, where can you send advice on how to improve the forecaster? Look at infoforecaster.biz. You will find here the email. You will find it in the footer, absolutely. If you guys have ideas, send them to us, because we are all ready. We are absolutely here to try to do the best job we can. Let me show you, for example, another interesting thing. Let's go see here. Calendar. Pfizer here is United States, for example. You see that in 7 days. There is the ex-dividend date. That is the date by which to buy this stock if you want to cash in the dividend. Here we put the alerts. So precisely you have everything under control. Okay? Well, guys, for today, we'll stop here. We'll see you next Tuesday. If you have questions, if you have insights to give us ideas, advice you want to see, specifically an analysis in short, infoforecaster.biz, send us everything, because really we care to do a job that is extremely nice, and that is that it gives value to you. So we are succeeding because we have crazy feedback. We hope you liked the first webinar today. Then we will also do other webinars, maybe more dedicated to trading, more short-term in short from today for all the next Tuesdays in the world. See you always, subscribe, so at least you also receive the perfect recording. Hello everyone, and thanks. I recommend, if you want to. Exactly, do the subscription. Maybe you have. If you don't have the subscription, do the yearly. Don't think about it anymore. If instead you have a monthly subscription, guys, do the upgrade. Okay, very simply from your profile you can upgrade. You do the yearly. Don't worry, because the system does all the calculations automatically, and you don't lose even half a day of subscription. Hello to all.